Hi, I'm Owen, the host of the Australian Finance Podcast. This podcast is proudly sponsored by BetaShares, one of the leading providers of ETFs here in Australia. Serving thousands of financial advisors and over 1 million investors, BetaShares manages tens of billions of dollars on behalf of investors right across the country. I'm proud to partner with BetaShares on the Australian Finance Podcast, Australia's premier financial podcast, because there is great alignment in the long-term philosophy shared by both businesses. I hope you enjoyed this episode of the Australian Finance Podcast. Hello and welcome to this episode of the Australian Finance Podcast. My name is Owen Rask. And as you may know, for the last few weeks, we've been running shorter format episodes to try and give you actionable insights as quickly as possible. In this episode, this very short episode, I'm going to explain to you why this week I invested $100,000. Now, you're probably thinking that's a lot of money, or maybe you're thinking all at once. I'll be answering those questions this week, and also how to invest when you're faced with uncertainty. I'll also tell you exactly what I invested in. Okay, so let's start at the top. There is a lot of uncertainty around in the global stock market at the moment. There's talks of tariffs and trade wars and all different types of things impacting the world. We've seen that the stock market so far in 2025 had a quick rise, followed by a really tumultuous fall, and it's been a rocky ride to say the least. So many people are spooked about geopolitical events like wars or issues that are going on overseas, and fair enough. It's human nature, we would be worried. The news is making us pretty fearful about some of the big sell-offs, using phrases like market bloodbath. Now, you'll never hear Rask say something like that, but you do see it, and it does spook people. Just last week, we found out that maybe some of Australia's big superannuation funds were hacked. There's a lot of negativity around at the moment. So why on earth would I then go and invest $100,000? Well, the answer is because there is a lot of negativity around at the moment, and that is why we invest during times of uncertainty. It's not during the good times when you get a great deal or a bargain, it's during the uncertain times. It's kind of like an analogy of running towards the fire rather than away from it. Thinking this way can help you rest easy at night, knowing that, I have this under control. There have been bad events that have happened in the past. One of the things that Gemma and I say on the show a lot is, if in doubt, zoom out. One of the things that I recently did when we saw this big sell-off in the global stock market and the Australian stock market is I did just that. We did a live show, which has since attracted around 10,000 viewers who have dialed in to see some of the amazing data that we were able to pull up during that session. And one of the things that you'll find if you look close enough is that 1 in 5 years in the stock market is negative on average. Now, you can have those 1 in 5 back to back to back that has happened in the past. And some of those years are really scary. But for the most part, long-term investing wins because 4 out of 5 years is positive. And that's what makes market timing really, really hard, is because on average, you're going to lose. 80% of the time, the stock market goes up. So if you're worried about the stock market crashing, you should know 80% of the time at least, you're going to be wrong. So we don't do that at Rask. For many years, we've taught you that the best thing you can do is invest regularly. Sometimes people call this dollar cost averaging, or DCA for short. This is just the process of taking an investment, kind of closing your eyes and just investing it. If you've got a good portfolio, it's about just putting your money to work time and time again. And if you do that for long enough, one of the things that it does is it takes away the guesswork of trying to figure out when things are good or bad. But secondly, it means you'll get a little bit of ETFs or stocks at lower prices and a little bit at higher prices and a little bit in the middle. And overall, you're going to get a nice long-term return. That's the beauty of dollar cost averaging. It's really important when the market gets a bit spooked that you don't turn off those automations or that regular contribution strategy you're doing. Remember, that's exactly why superannuation exists and why your employer pays your super either every month or every quarter. They're forcing you to dollar cost average. So 80% of the time, the stock market goes up. Why did I invest so much money this week? Well, as we've spoken about on the podcast from time to time, I like to do something called equity release. This is where you can pull money back out of your home or your mortgage if you've paid off some of that mortgage in advance or just over time. You can do a refinance and you can pull money out and then invest it. If you're familiar with this concept of debt recycling or equity release, you probably know what I'm talking about and you've seen it many times before. I'm happy to answer any questions you have on the podcast. Just follow the link in the description or in the podcast player, and we will answer your questions in the next Q&A, or you can jump into the Rask community 24/7. So I'm going to tell you about a little bit of timing and what I've invested in. I invested this $100,000 into ETFs via the Rask Invest platform. This is what we manage here at Rask. I'm the Chief Investment Officer. I invest a lot of money on behalf of our community, and we do that through ETFs. And so what I did was I made a commitment to our community that I would invest some of the money that I redrew out of our property. So we took the money, my partner and I, we did the refinance. It took a while through Alcove. We did the refinance, and it just so happened that the money cleared into our bank account less than a month ago. Lo and behold, the stock market falls. So I could have made the choice of breaking it up over the next few months, or being like, well, this is a pretty good opportunity. I may as well just buy more. My time horizon is long into the future, 20 or 30 years. I know ETFs. I'm comfortable with a diversified portfolio. It's not all in one stock or all in one ETF, which I think is often a mistake. It's diversified. I've got some shares, some global shares, some Australian bonds, some international bonds, some cash, bits of everything. You can actually find all of the individual investments inside any of our portfolios by going to www.rask, that's rask.com.au/Rask Invest. It's all available there. I'll put a link in this podcast description. So you can see all of the ETFs. Inside the portfolio that I chose, which is Martian, I've got the Vanguard Australian Shares ETF, that's VAS. I've got the iShares S&P 500 ETF, that's IVV. We've got IHVV. We've got Australian bonds in the form of IAF, that's the iShares Core Composite Bond ETF. We've got the BetaShares AAA Cash ETF. We've got VBND, the list goes on. You can see all of the ETFs by visiting that URL. Finally, I want to just cover off this idea between lump sum investing and dollar cost averaging. You can cut the data a few different ways to determine which one is right. Ultimately, what matters is that during a market crash or a market correction, it's not even really a crash, it's just making sure you feel in control and you have a plan. If you got spooked this week or last week and you're thinking, this is a lot for me to handle, reach out, get help. Speak to a financial advisor or just ask someone you know about how to stay calm in a moment like this. Remember, in the short term, as Warren Buffett says, stocks are risky, but in the long term, they're risky not to own because they do grow and they do pay income. So keep in mind that this video and this podcast contains general financial advice only. I don't know your needs, goals, or objectives, and I certainly do not know your risk profile. Do not invest in any of the things that I invest in simply because I've invested in them. Go away and do your research and speak to a financial advisor. Read the product disclosure statement or PDS of any ETF before you invest. It's just available on the ETF issuer's website. And from there, you'll be able to make a more informed decision. Don't forget, we have resources to get financial advice. I hope that my commitment to investing this week kind of does reinforce that maybe I don't have all the answers. I don't know what the stock market's going to do this week, this month, this year. I just simply do not know. I don't think anyone knows. But one thing I do know is that my future self will thank me for investing. And if I get to do that at lower prices, well, I'm happy to do it. So let me know what you think in the comments. Reach out to me in the Rask community. I'd love to know what you think. Happy to answer any questions you have on an upcoming Q&A episode on the Australian Finance Podcast. Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.